Start with China. The economy there defying expectations, at least for now. Third quarter GDP came in at 7.8%. That is the highest this year. And it likely confirms that the economy will hit the government's target of 7.5% GDP growth. But the road ahead could be bumpy. Questions remain over the quality of growth. One red flag is the skyrocketing government debt. It's estimated to have at least doubled in the last couple of years to 11 trillion yuan. That's roughly 27% of GDP, and that's just the local debt. China's sky-high property prices are also a problem. They're up 9.5% last year compared to a year ago. All of this is making residents and analysts nervous about a housing bubble. I asked Nobel Prize-winning economist Robert Shiller if what's happening to China is similar to what happened to the United States a few years ago, and also why he was chosen for the Nobel Prize.
I guess I guess it's being there first, and I must have done that in some parts of my agenda. I think maybe the fact that I was among the few people who predicted the stock market crash in 2000 and the real estate bubble bursting, although I can't claim any perfection in predicting, but the fact that the profession at large was so bad at recognizing those bubbles, it kind of gave me a little edge.
The impact from the housing collapse in 2008 is still being felt very much even 5 years later. Now, you've gone on the record a number of times, you've predicted the housing crisis here in the United States, but you've also gone on the record most recently talking about the rest of the world, specifically China, saying that perhaps China might be entering a dangerous territory here with the housing market. Maybe you could help us draw the correlation between what you saw in the U.S. and how much of that is very similar to what you see in China.
Well, I think that housing booms tend to be driven by stories. This is what I've written about, and especially new era stories that promise a bright and brilliant future. Now, China is already a new era story. It's doing extremely well. It has been. There's some signs of weakness lately, but I think that creates a potential volatility in the market. And when you expect to be in a new era, you don't know what the valuations might be, and you can be extravagant in your valuation of individual properties. So I'm not surprised that there's a lot of volatility in China or other emerging countries.
One of the things that a lot of people say when they go out and buy property, specifically in China again, is that first of all, it's very important to own these hard assets, real estate assets, and there's this general belief that the property prices won't fall. And that's exactly what we saw in places like Las Vegas and Florida and other parts in the U.S. where you saw sort of these bubbles. And I'm wondering, is it fair to compare the two psychological similarities?
Absolutely. I see this in many countries. I was in Brazil recently. Their home prices in Rio and Sao Paulo have doubled in the last 5 years, approximately. I was in Colombia. I went to Cartagena. It's a city that showed a huge price appreciation. It's the same story. You talk to people in these countries, and they say, well, the economy is doing very well. We're getting a middle class. Our mortgage institutions are developing. Why not? But they lose perspective, and it goes too far. Yeah, it's plausible that home prices would be higher, but the people just lack a perspective, and they bid them up too far, and then they really might fall.
How much is the asset appreciation around the world, in the United States and Europe, and you've seen that with a lot of home prices, how much of that is related to the fact that interest rates are so low as they are right now, making money essentially very cheap?
Well, it's hard to quantify. Part of it is that how interest rates have, in many cases, been at record lows, and that creates a whole different psychology when you think that the interest rate is, especially longer-term interest rates, are really low. People in the United States, where long-term mortgages are very standard, they want to lock it in, so it causes a tremendous reaction.
That was Professor Robert Shiller from Yale, of course, newly minted Nobel Prize winner in economics.